Morning, everybody. This is Max Farrell from TexFXMarkets.com. Today is the 1st of June. Halfway through the year almost. Jesus, what is going on with us? Okay, so we are here today. It's exactly 11 o'clock. We're going to jump straight in. We're going to jump right over to our in fact, I have to make sure I have the right share screen on. There we go. We got our live account up. We have our charts up. Sorry, I am running way behind. I do apologize. Charts. I got to do load my charts. We're going to come down and go to 1 hour of mastery. 1 hour. Boom, right there. Hit these little buggers up. 11 o'clock hour. News happened at 10 o'clock. Really should have been already all set up. Big movement against. Got the MA50 way down low. Euro USD doesn't look like something I want to get into. No arrow on that one. We have an arrow here on Euro JPY, Euro Yen. Sometimes I wonder what happens to my MAs on these. Seems like they balk off for some reason. Boom. There we go. Pull back a little bit. Let's look at some good numbers. There's this right here. There's that number. Something like right there. It's looking pretty strong, but we still have a buy pattern here. So I'm going to go look at some of the other ones real quick. We're using our trading view charts today. Nothing on that one and nothing on that one. Let's go look it over at secondary and we'll come back to the others. I'm still waiting on lawyers to tell me whether or not I can show trades for commodities and stuff like that on Nadex, even though that is derivative. But we're using live data from the market, so kind of playing that whole woulda, shoulda, coulda thing. Nothing there. Come on. Nothing there. All right, so we got a AU, got the Aussie. We're going to pop this one up and just have a look at it. We have this double here. But where I would feel really comfortable at is kind of staying right around here. If you, let's see, let's get this up here so you can see this. And this is where I would feel comfortable at. Where it's staggered here, kind of punched out some. Let's see what that looks like on Nadex. That is 72.76, 72.76 on the line. Forex binaries, auto USD. We're looking at 12. Oh wait, what did I do? I was on the wrong one. Shit, boy. No, sorry. Wait. Oh, auto GPY. It's been a morning. Auto GPY. Open up. I said. 70, and again, talk myself right out of it. 72.76. Get out of the way. There's 76 through. Okay. Well, one deviation, two deviations away. Let's do this. Let's do 25. No. 75. Place off. And that's one working order on. We're going to go back into here. Because I know there's another one. What's the other one? Was there another one on the secondary? Nope. Let's go over to the primary. Go to the masters. The UJ, yeah, and the Audi. Again, in these videos, we're not really trying to make a trade happen just for your benefit. So if I feel there's a really not good reason to get in, then I'm not getting in. Got it. Good. Same thing on from the Audi. This line right here, being the mean of this zone, if you will, could theoretically be up here, right? Could theoretically be up here. But I think that if we made it the mean here, 67.55, there's a possibility we can get a bounce off of that. 67.65. There's 64. Oh, wait, what did I do? Did I do that right? 67.55. That's what we're looking for. There's 52. There's 56. That'll do. And what I'm going to do is just do that in same thing. This is a precautionary trade. This is one that we're hoping that it will pop off. And if it does, then we get to, let's do, I guess we're in blue, right? That's what we're looking for, right? And let's show you what I'm talking about here. Since we just put a trade right here, okay, working order, what we're hoping on is that it'll come down, hit off here, and then keep going on. That's what we're hoping on. That the MA will continue to move on with the price of action of the market, and it'll come down to right around here, somewhere in that vicinity, right down here to pick up the working order, just like a working order done on dailies, on what we try to do, like this daily mentality, right? Because we're looking at the last 12. Like, so there's 3 ways that we look at our trades in the process, right? We look at support and resistance. Okay, these lines, these beautiful wondrous lines here, support and resistance. We also look at dynamic, right? And in some cases, dynamic is a period of like what this bar is, what we just looked at, right? We just looked at that as a dynamic structure because we see a head and shoulders. We see a few other, here's another dynamic line right, right here, right? That's another dynamic, okay? Because it's real close to the vest here. And then of course we get into super support right there. So this creates a channel. And as it does and it commits to those structures, it begins to push out, right? And then there's counted. And this is a process that I developed. It's a process I developed in going from the arrow and going back however many. If you're on a 1 hour trade, then you go back 12 because it's a 5 minute bar, right? So be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That would be all the way down here, right? And would it kind of line up? Now you could use both to be looking at both to see if, or all 3 of them, you know, looking at structure, and if all 3 line up, then yeah, you got a big possibility, right? But however you want to create your golden trade mentality is completely up to you. Now, could I have come in at the top of this top here because it hits here and it hits here and all that other kind of, yeah, absolutely. This is another dynamic structure right here. Okay. We could break down every single pair. We go to the 1 hour, 15 minutes. We can go to them all, right? And in today's lessons, I want to show you, this is really weird. Sorry about that. I should probably turn off the video for that. My eye got something in it last night and I can't seem to keep getting it out. All right. I want to show you on a top-down analysis of we call top-down analysis on the charts, and why they're so important to us when we're trading. The kind of flip between the two, especially when you have things like this dynamic chart system of using TradingView. There's great opportunities for you to really see how well the market moves and what it does. For all you Forex traders on it, you should be paying attention, because you could trade the market with nothing on your chart, no MA, and just a bunch of lines that you create, looking for patterns. Now, I'm not talking patterns like in bar patterns, like it's a shooting star, or it's, you know, a hammer, the Thor's hammer, the fist of God, you know, whatever you want to call it, right? But there are certain patterns that yield out a level of consistency and value. Okay, and I'll show you what that looks like here in a second. Once we determine that there's not really a trade pattern happening for us this morning. And again, you know, I don't think we're going to get picked up on these trades because it's going to be too far away. And we are already getting that dynamic resistance from this little pad right here. This is where we're getting it from, right in here, right there. Okay. All right. Let's run over, see if anybody's on chat. Nobody's on chat. Okay. Now let's get back into, yeah. Now this is the week of the NFP. So make sure that you're ready, that, you know, during the week that you're going to be having, you have to be a little bit careful. Okay. Get over to friends over at investing.com who we use our economic charts with. And we're going to look at this week. Okay. And we're going to come down, like today's pretty not solid, but it's kind of cool. You know, you got a little bit of trading tonight in Auto USD, stay away from, you know, those kind of, you know, JPY, those kind of things. Anytime we get this nighttime activity, I would stay away from the USD, Auto USD and USD JPY at night. Two master pairs on Nadex to trade. And then you get into Tuesday, okay, and you get a little bit more during the day, some in middle morning for the London time. But again, tomorrow night, better steer away from that Audi, okay? Steer away from that stuff in there. You know, can you trade the news? Yeah, absolutely. But why start now? Wednesday, okay, this is where we get about halfway through the week. The morning time, you know, mid-morning, 10:30. Here's the USD CAD. Here's a lot of 10:30 news. And again, more nighttime activity, you know, so all you nighttime traders, you third shift traders, be very careful within trading the market because you could get vacancy trading happening as well. You know, nobody's trading the Auto USD, but everybody's going over the Euro USD, and it kind of affects that process. So still no real super big news. We got crude oil, of course. Crude oil inventories affecting the CAD, our little prima donna pair, more often than not. And then we get into interest rates and a few things happening on Thursday, okay? But again, it doesn't seem like a really big super news day in the morning. You could get pushed around a little bit by 10, 11 o'clock. You should be fine to start getting in there and grabbing some good trades. And then, of course, on Friday, we have the NFP, the non-farm payroll. Yay for you. I don't trade on Fridays. This is one of the primary reasons I don't. And so if I do, it's I got to like have golden signal. Like it's basically the arrow has to form the sign of an M and has to flash in the sky, right? And Batman's got to come and be like, you're going to trade. But, you know, for all you brave hearts that get in there and practice and do all your things, it is the NFP. This week is going to be a little bit lighter than normal in the movement of the market. But with everything else that's happening in the world, who knows? You know, we could invent a new strain that unpops our head from everybody's butt, because whatever's happening in the world, whatever side of the fence you sit on, you know, we shouldn't be making what it is. And this is not a political, you know, statement at all. It's just a humanity statement that we should really start to value what we have. All right, let's get into some teaching moments. Okay, we're going to utilize now. If you're not using TV charts, if you're not using trading view charts, you got to ask yourself why. Why are you here with Dex FX markets? Okay, and that's completely fine. If you're here to learn trading, to learn the process, then you're going to start in a graduational process, right? You're going to go from one point to another. And where's the best place to start? We had a customer yesterday buy into an old link that we had. Excuse me, an old link that we had, and he bought the Dex Atomic old link. It was like 100 something bucks. And I refunded his money, and he asked me, why did I refund his money? And I told him that it was because I didn't want him to get charged for the Dex Atomic on something that we're giving away free at this point. And he goes, well, I want to pay for it. I don't want your charity. And I try to tell him it's not charity. It is an act of the mentality that I want you to be successful. Okay, when you're learning at that level. Now, listen, if you're coming on and you're prime, like you're like, boom, I'm here. I've traded the Dex Atomic. I'm in there trading every day. I'm making my thing happen. I'm going to slowly graduate you up to a point that you're going to buy an infinity package, right? Because you're making money now, right? Like you're trading live, you're making money, you're doing your thing. Donate, buy an infinity package, get to the next level, get the trading view charts on board. Because listen, you can trade. Now listen, you can just sit and trade on a Dex Atomic system, and you can just sit and trade this on this charting system, no problem. And for some of you, it's perfect. It's perfect. You don't want to mess with it. Hey, listen, don't fix anything that's not broke, right? Hey, let's look at the same thing, right? With that, you just saw the Euro JPY and that setup there. It's easy to get in there. Or the Audi, was it Audi JPY, right? That head and shoulders kick, right? The head and shoulders one. There it is right there. Here's the dynamic, right? Now, you don't got the luxury of all those other beautiful little lines all over the place to kind of help you make those decisions, but you got the regular ones. Look at this one. This trade right here came out right here, right? Came into the mean, bought almost at the money, and boom, sale, right? Boom. This one right here, we would have used this as I don't know if it would have been too close, 44, 51. No, this would have been also one, right? So the power is that you have the charts right here. These are very simplistic, very honest, very clean, very unadulterated with a whole bunch of stuff compared to like, this looks like a lot, like I'm losing my mind, right? But if this is all you wanted to make it happen, then fine, you're here. The next level, okay, is that you get a free account over at TradingView, but you're not going to be able to do a lot over there with a single chart and a single process. You know, if you're only trading one pair, yeah, and you're going to have to flip through, it's going to become exhaustive. And I'm not here to make it harder for you. I'm here to make it easier for you. Don't go to TradingView until one, you got the time to trade full time. Two, you got the money to be able to afford to get a $59 package for the premium or one of the pros and pay for the, if you're looking to trade commodities and indices, then you're going to need more data. And that's like an extra $11 a month. So unless you got the money, don't do it. And this is like I was telling him last night, the customer was telling you about, is that there is a mentality that goes with this. And the mentality is, where are you at with your want to trade? If you're just trying to kick the tires and I need to find a signal that I can just go and get, and then I can put my money down on and then come back, and you're looking for investments, that's 4 doors over. Okay. What this is a network that you're looking to trade on, that you're looking to make money. Okay. I'm not here to give you investments. All right. I am, in a way, I have a portfolio system. We are Our City Investments, right? But in this particular case with DexFX Markets, I'm trying to teach you how to trade. Don't call me and say, hey, what system do you have that I could just go in and take a signal and just on my phone, and then I don't have to worry, I'm just going to win. No, that's not what I'm looking to do for you. When I say that I want to help you find your idea of success, I mean to help teach you how to gain your idea of success. Maybe I should alter that mission statement after all these years, is to help you learn how to grab it, to seize it, take it. That's yours, right? And I also have all these systems in place that if anything were to happen to us, like if COVID did take us out, which it didn't yet, still trying. It is still trying, man. We still need your guys' help. We get hit every day with new stuff, right? We have all these expenses, and we have a lot of you that are doing recurring payments. You have a lot of people that are coming on, but as things still hit us, we still get nervous in between exchanges of things that happen, right? You get a server that goes down, you get a process that happens, you owe taxes, you owe all this stuff, you got to make stuff happen. Running a business is not easy. So your first level that you're here with is to start learning how to trade this process. Know what the arrows are, know what to do. Look, this is a big loser today. You're a big loser, you Audi JPY, right? Stupid big loser. I don't know what happened at this time period at 0400 this morning, but something happened. something came out and punched this poor little thing in the face. And it was one of the losses this morning. So that's right. I'm always fascinated when I see losses. They are an outlier, right? They are an outlier on the Dex atomic system when you use it right. There's some people who just do the 12, right? They go back, a timed process, right? Account support area, right? You go back however many bars, and then you go with a high and low and find out where your levels are at for that time period. And there's some that really focus on, what charts that they're going to trade on, what time period they're trading on. Getting to know that, getting to your consistency requires patience and discipline. We say this all the time. So in order to do that, excuse me, very dry in here today. But in order to get to that patience and discipline, you have to have an understanding of what you're looking to gain. You got to have an idea of the goal. The end of the equation, right? If I were to write the equation out, your life-saving affirmation of equations, right? It would look like this. Ready? In fact, let's jump over to a whiteboard. And we're going to clear. Okay. Your true equation is this, right? This is life-saving, life equation. Okay. And this life equation for your trading life, let's just do this, trading life. You can apply it to other things, right? But right now, this is all you should be hunting for. That's it. Now, in order to get to this final destination, this number, this letter right here, right, which stands for goal, okay, you need to do all these other things, but you kind of need to know what your goal is. And how do you get to that? How do you get to that understanding of what that goal is? Is that you have to have a real conversation with yourself. You probably heard me say that in training. You have to have a real conversation with you. And I'm not talking, well, I need $7,000 a day. I'm not talking desires. I'm not talking, fiction, I'm talking real conversation. How much do you need? Right? Because in the equation itself is the answer to the answer of what you need for your goal. You really don't need much at all. Because once you get to consistency, right? Now, what this equation is real quick, patience plus discipline equals consistency plus your volume equals your goal. Now, this process is simple. If you determine that you need $1,000 a month, right? And this is your goal. And you decide that I'm only going to trade 4 days a week, right? This is four times a week. And each time that I trade, I'm trading my consistency, right? I got my patience and my discipline. My consistency rears its head and equates that 4 times a day, I'm winning an average of $25 per trade. Okay. And I'm trading those 4 times. I'm making $100, right? If I'm trading 4 times a week, 4 times a week, and I'm making about $25 a day. Maybe I'm just trading 1 time a day. I'm finding that perfect signal. I'm trading 4 times a week. That's $100 a week. Okay. And on the average, it's like 4.8 weeks in a month, but well, let's just call it 4, right? And so this equals $400, for the month. Now, some are like, well, Max, that's $600 off. I need to trade more days. No, you're applying volume to the wrong section, right? Because we're only trading 1 contract at a time when we do this. 1 contract. And so we say to ourselves, okay, listen, this equates to $400 on the average, right? I've done this like 2-3 months in a row. My balance is also important too. You can't have a $10,000 goal of here with $500 in your account. You can't have that. You won't be able to make that. That requirement's too big for you, right? And this is obtainable goal that we're talking about. Your attainable goal might be whatever your consistency value is. You go, okay, listen, I can make a goal and it's either achieve it or not achieve it. Your first goal, ready for the mind blow here, is to achieve consistency. That's it. Is to achieve consistency. If you're consistently making an average of $25 a day trading one contract, trading 4 times a day, right? Or 4 times a week, whatever it is, whatever that consistency is, and it yields you the number once and something close to it. Let's say the next month you do it and you do $500. What is your consistency? What is your average at that point, right? If your average then is what? 450, right? You getting it? You did it for 3 months, got another $500 over here, or maybe even you did 300. You know, you all should know how to do averages, right? There's 800, 12, right? Divided by 3. You got me? So your average is 400. That's your consistency. So now you know that if over the last 3 months you've been trading this process out, and you've been really getting a good feel for it, you know that your average is about $400 a month, and then you could trade it. How do you get to 8? Simply change the amount of contracts you trade with per time. We know this. This is simplistic stuff. This is real easy math. This is real good mentalities. But where most people go wrong is that they go, I need $10,000. Then I'm going to go in and I got to trade 17 times a day because, you know, you got all these signals, Max. You got all these signals. I should be getting them. Should be getting them all. If I got those 4, then I can get 8. And if I got those 8, I can get 16. Oh yeah, but I traded too much and I lost 3 on this one today. But, you know, because they're not waiting for perfection. You're just looking at the market. You're just looking at the signal. Let me give you an understanding here. When we go into, I'm going to go in and do share, new share right here. This screen right here, you see what? The components of this screen are simple. Let me, oh, I don't know why. There we go. Okay. We see the market. We see the underlying market, right? We see the arrows. We see an MA, an average of that market. These 3 components all lead us into a mentality, okay? If you see, it's like one of those pictures that, you know, they show you like if they show you a tree that looks like an old woman that looks like a dog, right? And they go, if you've seen an old lady first, then this is, you know, if you see arrows, nothing but arrows, as determining factors of what you should do, like, oh, there's an arrow, I got to get into that trade. There's an arrow, I got to get into this trade. But if you see the market as opportunity and you see these as conversations that you need to find answers to, right? You're researching, but you don't have to research back 7 years. Your answers for whether or not this signal will be successful or where to do it at to be protected is all right here in this information. Like, why would you have avoided this particular arrow, this big old ass bar here, right? Because it gave you a lot of information down, told the signal to go. It did. Now you could have still came back up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And here's the high, right? Would it have won? Let me see here real quick. Yes, barely, but it would have won. But again, there's just plenty of opportunity if you're looking at the market, not at the signal. If you're looking at the market and not the signal, then you see more. You can understand more. right? If you understand your own timing too on whether or not you should be trading. Okay. Why do I say to people to avoid the news? Well, when there is news, there is in some cases a lot of excuse me, a lot of opportunity for market to be more liquid, and there's a lot of people coming in and out. You can kind of see more information. When it sits stagnant, sits in a channel for too long, you don't really understand where it's going, right? So you tend to get oversimplified. Okay, here's a line. It's above that line max. Why did it break this line here? I lost my trade. Why did it break that line? That support line is really strong. Well, actually it wasn't. This one down here was. But when that signal comes out, most of you go, here's my trade. You don't know what's happened here yet, so you can't even judge that. You go, here's my trade. Oh, look, it's at the money. And this is the line I should be at. I'm going to put my trade right here. Look, I got in for $43 for profit. Oh man, this is going to be an awesome trade. Then it goes against you. Then you start to think, oh, maybe I shouldn't have got into that one. And then all this doubt sets in, all this process sets in. Okay. So when you start looking at the market, you look at the time of here to get into a trade, right? What I would do is I would pull back to here and yes, get in for my 25. I would have lost less money, but the opportunity was there. I would have actually won from this level. Don't try, I say this a lot when I do the trades, I'm not looking here to make a trade happen just for your benefit, right? And that's the same thing, that same conversation you should be having with yourself. You should not be into it just to make a trade. You should be looking to make the perfect trade. There's a whole bunch of things that you should be looking at the time that these trades are happening. Some of you get into signals that are only with the moving average. Some of you get them when you go against the moving average. Some of you only use red lines. Some of you, you create your own rule structure. Right? Like if I would have taken this trade, if this would have been a trade for me to look at this morning, and I would have been here to do that trade, right? We talked about this one. This would have been, you see, right here. This was that line that we were talking about earlier, right in this area right here. Right? So learning how to read the market and get a feel for the market, where things move from. Your history's right here. Your information's right here. Look at this. This is beautiful. Boom, 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 boom. Right? Searched it over, big impulsive bar coming back, come back to retest, and off it goes to the races, right? Create this little double top kind of head and shoulders mentality. This is a good setup. This is a nice head and shoulders setup. And I'm doing this on the easy charts. Right? The information I have over here is even more expansive. Oh, wait, there's that line, the one that we've just pressed in there. Now we created that line just by looking at the dynamic, but again, learning how to read that chart pattern and that process is important. Now, why didn't I get into this particular trade this morning? It's because we had an up here. You could trust that process. You could listen, there's ways to trade this solution that if you're prepared for the consequences could yield you or hurt you. If you're prepared for the consequences, then it's worth it. If you're not, then be cautious. There's only a couple different ways you can trade this process. And that's one with the mentality that you're here to win more trades than you lose, of course. And how do you do that? Well, you got to get it in practice. Okay. All right. Let me jump over. Nobody in chat. Okay. I think today is going to be sort of a little crazier day. And I want to show you this because we're on TradingView using these charts, knowing how to trade, knowing how to use the charting platform for TradingView is important. But there are, let me pull up this one right here. A lot of people, when they first start, they get overwhelmed with how much stuff that you can throw on a chart. But I could trade this chart if I was trading Forex with some historical data, right? That's all this is just historical data. If I'm looking at a 5-minute chart, that's all these are. Every bar is 5 minutes, right? If I jump up to a 1 hour, usual standard, these all become 1 hour charts. So I'm just taking a longer look back in history because the bars are less. Still the same amount of bars if I do 50 bars, right? And if I go back 4 hours, still 50 bars, but it's more time. And if I go back to a day, 50 bars, but still more time. Okay. So now at this level, what we call top-down analysis, we begin to look at the value of what is the, I guess, moving average, if you will, the average of itself, and which direction those processes are happening, and also levels. Now, I could trade this without a moving average on this, but again, this is also just another form of price action, right? Knowing what the price is, because it's just taking the averages, it's calculating. It's not predicting direction, because this could just drop down right now and then all of a sudden this turns over, right? This is not predicting the analysis. This is lagging behind. It cannot formulate its direction or its movement until the market has instantiated. Excuse me. So on this daily chart, we look at this moving average and it clearly states from this point right here has been a trending up, but really it started back here. See, so it's a little lagging from, here's the low point, they're both about the same level. Here's the low point, second point up, third point up, because with every new low, it gets higher, considers itself an uptrend. Okay. So we can easily start to put in, we're going to put some lines in. Okay. Now, please bear with me. We're going to create the daily lines orange. Just remember that. Okay. And we're going to try to use either 2 or 3 points of contact for that process, which means that I'm looking for at least 2 points of contact from previous information. 1, 2, 3, 4, right? Because I could set it right here, but this is just a low from a particular time. We could do that, right? We could actually just come in, click a low, a high, and a medium, right? And what we're looking for in the medium is those points of contact we referred to. And we could do just that. Could we put in all these other extra levels, these dynamic levels? Yeah, we could. But let's just do a low, a high, and a medium. And now we're going to come down to our next level down, which is 4 hours. Okay. And I'm going to do the same, over a chart period. But this time I'm going to take the low and I'm going to change the color of the line to, say, light blue or aqua, wherever that is, right? And I'm going to grab, there's not really the high. The high is now, right? I mean, I could do just that, but I think I'll do that because remember, I'm looking for more than just 1 point of contact, There's 2 points of contact. There's a couple. Oops. There we go. And it would help if you made the line straight. Okay, because that's on a different time frame. All right. And then we're going to do the medium, right? We're going to look for something that has more than 2 points of contact in there. And that's right about there, right? You have to get creative here. All right. So now there's a 1 day. Right. And then if you pull back, you can begin to see these little dynamic levels that happens on the 4 hour. Now let's drop down to the 1 hour. We can kind of see where we're at, right? And again, we're going to do the same thing. We're going to grab the low. We're looking for multiple points, but we're going to change the color of this to let's say yellow. Okay. And we're going to grab the, now again, we're looking at more than one point of contact. We can't be using this area over here. We could do this like that. We're going to change it to yellow. Okay, because you got one point of contact there. We're going to extend that past, right? So 1, 2, that's right where the high is. And then of course, I don't think I did that right, did I? All right, so we got the high. We're going to grab the low, but that's only one point of contact, so I can't use that one. I can come to here. And you'll get an understanding of this, what I'm doing here in a second. Okay. It's not really relative because it's not within our market. And then the mean. Okay. And now we're on a 1 hour. So now we got to get down to 15 minutes. And as we start to drill down, you begin to see where the, the powerful lines at. This is the 1 hour. It's like a little resistance area, right? Boom, 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 right? And we do the same thing again. This time we're gonna make these say red. We're not really gonna put them on the 5 minutes, but we're gonna have a look. We already have one at the low, right? Which we can reiterate again. It's a single point. There's a double, right? We can kind of do this right here. Right? You come up to another value. What we're looking for. Got 1 or 2 points of contact here. We're going to just kind of offset that just a little so you can see it's a double, right? Because that's a good level. And we're going to do one in the mean. And again, this is the true value, right? So then if we start to really pull back some, you begin to see all these different levels, right? You have a daily, and then you get intradays all the way down to 15 minutes. And then when we jump down to our trading platform, this is our 5 minute, we're trading a 1 hour chart here. We start to validate, there's our red zones right there. Then we can start looking at the mean. And if we get anything that comes inside of the trading value, then we can kind of look at, where do I want to start a trade? Well, there's a couple different values. You can look at breakout trading. You can look at trend following. You can look at just a whole bunch of things, right? And how do you use those processes? Well, I always think that if the market is always coming back to the average, okay, this is above average, right? Way above average. Once it starts to get back to vibrating close to average, okay, and it starts to make and break out of these values, like if we would have taken a trade here and put a stop loss here, we would have been stopped out. It would only been like, 10, 15 pips, but this would have just been one loss, right? But then if it broke past this value and we put a trade in, we would have won some, right? To what level, to what avail, it all depends on how you trade your process, okay? I would have also looked at this line right here as an intermittent for 5 minutes. We would have changed this color to something obscure. Okay. And I would know that if it broke that level, okay, once it started to stutter and it broke through that level, then I would put a trade in for a buy and I would make this my stop loss. Real tight, super tight. Goes off, does its thing. It's made now. If I would have gotten into this trade, let me move my pretty face out of the way. It's 72.98 right now. We would have gotten in at 80. That would have been a 20 pip success story so far. And once it gets to a certain level, you start to capture profit. So we're going to say that this purple line is where we start to move our stop loss to, right? There's our stop loss, and we start moving it up. We get it to break even where we got in, and then we move it up a little bit further and further. And we know that now this is another level. So now we've captured from where we got in 72.79 to 72.90, right? It's only, it's not very much. It's like 11 pips. But 11 pips. Remember CVG, you're trading one micro lot, one standard lot, one mini lot. So it really depends on you. And again, I haven't done anything other than take about 10 minutes to set up the charts to give me more information. Okay, we call this process simply Forex. And knowing that these patterns, this process, is all about just your timing and choosing directions to go with, minimizing your risk to maximizing your profit. I know that sounds very simplistic, but it's true. And I'll show you why here in a second. If the idea of trading is all about minimizing what I just said, minimizing your risk, maximizing your profit, how do you do that? Well, simply in this fashion. You look for opportunities to set up like I just did here. You look for opportunities to set up that will give you like this little micro breakout, but really super tight, right? 1 or 2 pips, 10 pips, 5 pips. Because here's the thing. If each time that I go to trade, I risk 1 unit to make 3 units. This is really, really super important. What does my success rate need to be? But I don't get out until I've made at least 3 units. I sometimes make even more because if I move my stop loss up, if I move my take profit out, if I get one a stop loss system, but if I choke it up, if I trail my trade, I could actually make more money. Like I can make a 1 to 5 or 1 to 10 in some cases. But even at a 1 to 3 or a 1 to 2 or even a 1 to 1, what is my success rate? Well, if I risk 1 to make 1, what do I have to be? I have to at least be 50% to break even, right? Does that make sense? So I have a choice. If I risk 1 and out of 10 trades, I win 5 or I lose 5, and when I say loss, I mean, I'm only risking 1 lot to make, however many. So if it's 10 pips and then to make 10 pips, that's a 1 to 1, right? This isn't about pips. This isn't 1 pip to make 3 pips. This is 1 unit to make 3 units. If a unit is 10 pips, right? Or, that's basically what we're looking to do here. So your idea of unit has to be constructed first, right? If I say, all right, well, my stop losses is 5 pips down, I need to make 15, right? This pips now. If I'm risking 5, I need to at least put the take profit in there to make 15. Now, sometimes you can't just go, all right, let me do 1 to 4, right? Or 1 to 10. You have to be structured. I like to vibrate in like right around this area, right? These are the 2 I really like to do. Could it move 15 pips? That's what you're looking for. So the construct here is understanding this process is if this is 50-50, then what is this? How many do you need to make? Well, if I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right? And I have a 1 to 2, right? So, and let's just say at 50%, I lose 50% of my trade, right? It's like if I have a system that wins me 50% of the time and I lose 1 trade per each one, I use one unit. That's 5 units, right? But then I win 5 times. Now I'm winning 2 units, right? So now that's plus 10 right there, right? Minus the -5, I'm still plus 5. That's at 50% success. What happens if I vibrate at 60%? Well, then now I'm at plus 15. If I minus at 70%, right? Actually, I'm even looking at, now you don't even really need to have a success rate at 50%. What is it that you need to break even? Right? There's minus 4 to 10, right? That's 40% success and so forth. 1 to 3, about 35% success here. That's all you need to be successful. I could flip a coin if I wanted to. Now that sounds very easy and blasé. I understand, but let me tell you, there's a lot of people that make this very convoluted. All you need is some really good understanding of how the market moves and manipulates and works around certain levels. That's all you need. So like, why don't you trade that, Max? Why don't you trade that? Well, this is fine and dandy. This is beautiful mentality, right? But you have to be prepared for crooked brokers or huge movement against you, right? But if you're protected with tight stops, but you're not always protected. And that's the downside, is that I've had stop losses get broken. I've had stop losses not be honored, and you hear all the excuses. That's what I love about Nadex, is that they can't mess with any of that stuff. They do. Yep. Because it's an expiry based process for a derivative. So, all right. Well, listen, we didn't get picked. I don't think we got picked up on anything. Let me go have a look. Nope, didn't get picked up on anything. But I wanted to give you some experiences of the system and what we've done. Anybody in chat? Yeah, there's a few people. Hey, David Menny. I'm 4-0 today. Live trading, he says. Oh my God. Live trading using the TV charts. That's my live goal with my volume added to the trades. Switch to indices now to demo. Still working on consistency. Great job. The wins were in Forex. Sweet. Listen, David Menning and Ron Fickert and all you guys in there that are inside that Discord unit are just amazing. These guys have just simply really just even proven even further than I could ever do myself. 4-0. Could you imagine just 4-0 today? Let's just say you did an average of $25 per each one. That's $100 today. $100 that he made at that point, at least, right? He could have probably got in some for less or some more or what have you. But even if that was true, trading one contract at a time, right? Now, David Menning's smart. So if he's got a balance that's constructed that can, he's probably taking it nice and simple and safe. But that's just per unit, right? What happens if you traded 2 contracts? You could have made $200 if you traded 4 contracts. Holy crap. Okay. The opportunities are crazy. Now, I err to the side of caution when I trade here, right? If he's done 4 today, he's had his time in, he's doing his thing. He's probably really looking for perfection in some of his trades, right? If I wasn't here on with all you guys and doing all that stuff, when I trade, when you don't see me trade live and on board here, I trade with just the same amount of protection for myself, but I may be a little bit more, I don't know, gruff, if you will, on my trades on what I want to be able to utilize, right? I make my decisions for me, right? I don't want to show you poor habits being in the beginning, and it's not poor habits for me, because for me, I trust my stuff, very strongly. And I know I get the gut feel of what trades I want to be able to work with, ones I don't. But that comes with, I could break that rule if I want. Like, I wouldn't have gotten into this trade, but I would have lost the other one. I would have lost this one because I would have gotten in, forget which one it was. No, I would have won this one. This one would have been the one I would have won, because that would have been my count, because I know these big bars that we get, I would have lost this one, but won this one, right? because we really didn't have too much at this point. I wouldn't have been trading at 4 o'clock in the morning, of course. So, that movement, but I would have won 16 of the other ones. Not a problem, but I wouldn't be trading every single one in a row. So you can't look at it that way. I like to sometimes go in and chalk off a bit of time that I normally would trade. Like if I go from 10 to 11 every day, if I went to the market and I said, okay, if I went to the market at 10 o'clock every day to trade from 10 to 12, just 2 hours, what would be my success rate if I used the same mentality? If I got this trade here at this particular time, and if I went to a particular level, would have gotten filled up. If it did 5 to 10 pips when it fires off right here at this time, then you probably got in. Yeah. So this one would have got in, and that would have been a win. If I go back to the previous day at 10 o'clock again, between 10 and 12, on just one pair, right? There's another one for 10 o'clock. I would have gotten in because we would have gotten in right here at this line. Boom, trade, win. What's this one? 12 o'clock. This one's exactly 12. So I wouldn't have traded this one. So I wouldn't have traded 12 to 1. I'm only trading 2 trades. All right. So there's 1 and 0, or there's 1 and 1, or that's 2 and 0, right? If I go back again to the previous day, there, where is it at right there? Previous day right here. I would have gotten in because we would have came down to this red, been a heavy line. It would have been an OTM here and probably got in for a 1-to-1 trade. So this would have been a $100 win. Okay. Here's another one at 11 o'clock. Now this one's been a little tougher. It would have came up to here. Yeah, this would have been a loss. So we would have had 3 and 0 with a $100 win. So, or 3 and 1 with a $100 win. So still 50, 150 minus 75. So $75+ at that per contract. Okay. But you get the gist, right? You go back, you look at a couple pairs, you say, when can you trade? If you're sitting down for 2 hours and you do that mentality, that's how you backtest this process. Don't go back every single arrow. Go back when you can physically trade. And if you really get serious, go back and correspond to what days you would have traded with news or what you wouldn't have, all that kind of stuff. But the best way to do this is not to go back to the future, right? Go back is to actually go into the future by trading live or trading in demo, but get on and start trading in practice. See what works for you. See what doesn't. The hardest thing in the world is to find consistency, but you can find sporadic nonsense all over the place just by going in and be willy-nilly. You've got to get controlled and be able to utilize that. Paul Davies here as well. Welcome. Christoph Kanye. Started looking for trades at 4 a.m. today and only took the very best set, he said. The very best setup I could find. Well, guess what, buddy? I think you got something there, right? I think you got something there. I'm in the wrong channel. I think you got something there because you've worked very hard to do that. And that takes a lot of discipline. Listen, if David's doing this full time himself and he's working from home, he's doing his thing, or if he does this part-time or what have you, that's his story. It takes a lot. It takes a lot to sit down and make that happen, only to take the best, not get greedy, not get worried, that kind of stuff. So my hat's off to you, David, and to everybody else that's in that system working. And if you're watching this right now, it's the top of the hour. We're about to head out. I'm finished for the afternoon. I have a whole bunch of meetings to go do. I got to ask you a personal favor of all of you here. If you're watching this, and excluded the founders and all you guys like that, even you guys, is to hit that donation button. I hate to sound like a public service or a PBS, donation night, all that kind of stuff every day. But listen, we are pushing forward. We have a lot of stuff that's happening, a lot of stuff that's working for us, and we need to get more people on board. We need to get more people in training and doing a lot of stuff. And we need to get this Dex Atomic series over to the ZDON and doing that. And we've strived to we're almost ready to release our database injection, which we're going to be doing like a signal kind of system in there. But again, that's not going to be the save all, okay? Because there's a lot of data that we have to procure to be able to do that with. And we're looking to possibly do that. We have also decided we cannot put commodity and industry information on the website. We cannot legally. do that because it's a lot of legality and logistics to make that work in this system. That's why we did it through TradingView. But even that, I have to be careful. I have to kind of show some real strong processes through regulation, and we may have to go get registered with the NFA, the National Futures Association, to be able to do a lot of this. I wanted to avoid all that stuff because my job was just to teach you on how to trade the process. Giving you signals for a derivative for Forex was different. All right. That's my time. I really do appreciate everybody. I got some things I got to go, people I got to go meet, babies you go kiss, all that kind of stuff. So you guys have a great day. Please hit that donate button. Please smash the subscribe if you're watching this for your first time. And if you can bring somebody into this process, great. We also will be putting out, if people are looking for work, we have another company, fabertech.com, that we're going to be putting out a link to here later on today for people that are looking to do some work. We want to train you. It's absolutely free. Does no cost to you guys at all. If you're looking for extra work, if you got some experience online, and you can show up to meetings and be a part of it and be a team player and make stuff happen, I'm looking forward to having you on board. All right. I'm Max Farrell. This is DexFXMarkets.com. I want to thank everybody for being here today, here on June 1st, 2020. And as always, trade well.